Good morning. Good morning. Hey, what's going on? How are you this morning, Mother Truck? Coffee? Same here. So, how's everybody doing? What's up, Travis, Donnie, Ben, Shanghai, Lonigan, Mike? How are you guys? I put a bunch of stuff in the analysis section. Um, and it's above in the Discord. Just levels and things to look at for your reference. Welcome everyone who's joining us on YouTube. Morning, Anselmo. Welcome, welcome. So, what are we looking at today? We are looking at our overnight inventory is short. Now, people have a hard time with this. There's a simple way to remember it. You just look at the close of the previous day, and then you just look at the majority of the trading. Is it above the close or is it below the close? Okay. So if it's below the close, it's short. If it's above the close, it's long. Okay. So right now it was short. It's correcting upwards. Okay. This 58.25 and a quarter is an important level. And let's see if we can stay above that going into what's tomorrow. Tomorrow is month end. Okay. Friday is the last trading day of the month. But because equities are marked T plus one and this is an equity index, we look at tomorrow as month end. Friday is market maker month end because market makers have to provide liquidity up until the close of business of the month. So they mark to market differently. Now, what are we going to do tonight, this morning, wherever you are? Well, remember the gap? Does anybody remember the gap? What's wrong, Mike? There's your gap. How they ever stood a chance? Order flow, my friend. Order flow is the spice of life, right? Just keep paying for that order flow. Pay for the order flow, make the market, right? Pay for the sugar and flour, make the donuts, right? Market making is not an easy profession. But getting back to this gap, this is a massive short position, and it's been holding our market. And check this out. Look at the lows of the last couple of sessions, right? For those of you who like trend lines, let's put some meaning to a trend line. This means when the lows are getting higher, it means the buyers are following the sellers up. When the highs are getting lower, it means the sellers are chasing the buyers down to capture them, right? That's like when you go and you negotiate for something and you see that the guy's got a lot of inventory, right? You walk onto a car lot to buy a Mustang and there's 500 Mustangs on the lot. Well, you go, no, no, I'm not paying that. You start walking out the lot, the guy follows you and goes, wait, 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 right? This, on the other hand, is when you want to buy that car, there's only a few of them and they keep raising the price on you and you got to chase price higher. Okay. That's this gap going into the end of the month is not great for shorts. Okay. And so let's take a look. There's a level. Where is it? Where is it? Where is it? And I posted it in the room. 58.37, which is what we banged up against yesterday, and our overnight high is 58.36 half. There's also, just going to drag this over so you guys can see. 58.37, there is a swing high at 58.43 and 3/4. What does that mean? It means a lot of short sellers, big short sellers, size short sellers, they'll be using this level as a stop. So if the market by any chance takes this level out, it will create some buying, especially into month end. That is a leverage move, right? If you are short using other people's money and they take out that high, you're going to start buying. Everyone's going to start buying, and we'll be looking for 58.53/4 as a target. That's for your longer term traders. Downside scenario is if we start taking out the overnight low, yesterday's low is the target, and we'll go and we'll look at those levels, right? Make sure that you have them, right? This stuff's all posted in the room with analysis on why we're looking at it, right? And let's go do our preparation. So we do the same thing every day. We know where the inventory is, right? We're in distribution. What are we distributing, right? We're distributing all of this up here. We've got shorts holding the market up. Pretend this is a kickstand on a bicycle or on a motorcycle, and it holds the market up so we can sell higher, right? So if you were long 20,000 contracts here, you'd be just naturally, just nicely selling them up here, right? If you're a size trader, okay? And that's what they do, right? Accumulation, distribution, right? And then when nobody wants to buy this crap, we mark it down and put it on sale, right? It's a market, right? Don't ever forget it's a market. It's funny. I was talking to somebody yesterday and I was explaining stuff to him and he was like, uh-huh, uh-huh, uh-huh. And for the last couple of weeks, I've been coaching him and it's like he wasn't believing what I was saying. And then I got him to actually run some trades and he was like, oh, this actually works. And I'm like, yeah, it does. There is a lot of information out there, right? There's a lot of books, there's a lot of knowledge. How much of it is actually practical and useful, right? Let's keep it simple so you can make some money. Because if you're writing a white paper on trading, that's a different story. If you're writing a doctoral thesis on trading, then there's a lot of stuff to look at, right? If you're trying to make money, you guys understand what I'm saying? I know it's early in the morning, right? What is the information that you need? So this sitting in front of, you know how everybody sits in front of a screen, then they blow up an account. Then they're not consistent, right? And they're struggling, right? There is an actual way to be successful. And it's not by blowing up 30 accounts and having to borrow 200 grand from your in-laws. That's not that doesn't make business sense, right? That's not how you do business. Right? Say it out loud and it sounds ridiculous. It's like saying I'm going to open a store and I expect to and I expect to blow up the business, and then I'll just open another store and I'll blow up that business, and then I'll go into this business and I'll ruin that. Do you guys kind of like when you say it out loud, it doesn't really sound smart, does it? No one? Yes? No? Am I just preaching to like nobody? Right? You know, you kind of want to be successful at this, right? Yeah, it doesn't sound realistic to go into business just to blow it up, right? Unless you're wired a different way, and that's okay. Or if you have a money tree in your backyard, that kind of thing, right? But most of us don't have a money tree in our backyard. Most of us don't have the last name Rockefeller. So we have to kind of be smart about things, right? So what you need to focus and concentrate on are trades that are actually viable, that make business sense. Because everything else is just BS, right? There's a lot of information, but how much of that information can you actually use to make money, right? You hear people talking about this and that, and like, well, did you make any money off it? No, but and then they just start making excuses, right? So what we do here is we try and put together a method, right? So you can make money, right? Every trade is a business operation. So let's go look at some now, right? What we like to do is we like these trades here. When the market looks below a level and fails, when it comes up above that level, you buy some, you put your stop here, and this is your first target. Your second target would be that standard deviation. Your third target would be that level. So say you buy, right, on the look below and fail of 18.5. Say you buy 5 contracts between 19 and 20, right? You put one for sale at 21, 21 and a quarter. Then you put another one for sale here at 22, and you scale the sells as it goes up. You put the sell orders in. So as the market goes up, you get taken out of your inventory. Now, does this make sense to you guys? From a business perspective and a risk perspective, right? It's got to make sense. Otherwise, there's no reason to put money at risk, right? You buy the inventory. Now, guess what? You are a merchant, right? As soon as you're long inventory, you're a merchant. As soon as you're short, you're a buyer, right? And that way you can dispose of your inventory and make some cash instead of sitting around and pontificating about chart patterns and waves And I'm not saying any of that stuff works, but how do you actually use it? Where do you put your stop? Where do you put your entry? How do you know that the business reason for that trade works because you're on a wave? Can you explain to me what the potential order flow will do when it transacts with that inventory? Right? You're selling oranges. Does anybody want to frickin' buy oranges? Hey Matt, how you doing? Right? I'm talking like this because we're stuck at VWAP and there's no trade right now. So I'm trying to get you guys clued in on business, really, right? And it's funny, I was teaching this guy yesterday and then he was like, huh. I'm like, what's wrong? You sound disappointed. He goes, you mean that's all there is to it? I'm like, yeah, but the execution of it, it's not going to be easy. So don't worry, you're still going to be challenged because it sounds easy, but the execution of this, right, is difficult. You know, I'm like, what did you expect me to say? On the third full moon, the market makers will sacrifice a person, and then this will happen. Like, seriously, right? There's no secret. It's a market, right? You buy a bunch of cheap crap, you sell it at a profit. When they don't want to buy it, you put it on sale, right? That's why they call it the stock market, the futures market, the forex market, right? And the business never changes. It never has, it never will. It'll just become more efficient with technology. So don't get sucked into these black pools, dark pools. Uh, what is that other stuff? All this software that tells you where there's liquidity. Seriously, are you selling? Are you trading like 500 e-mini contracts? No, then you don't need to worry about liquidity. Okay, that's not for you, right? Liquidity is the ability to transact size without adversely moving price. So if I need to sell 1,000 contracts, I need to find a place where I can sell them, right? VWAP, very easy. If I was long, fancy, I'd be selling at VWAP before VWAP. It's where you get out of your trades. Some people like to initiate trades at VWAP. Like say you were short VWAP, you put your stop above it. And that's possible when VWAP is nice and flat. But when VWAP curls and does that, it's useless as you know what on a bull, right? Does that make sense? Hey, Dan. The value area is not really useful for trading, right? It's useful for getting information, right? Hey, Texas Mike. Well, I grew up in the prairies, so all my friends are rednecks. Okay, right? The value area high tells you where the cost basis is. I only use one VWAP. Now, I'm not trying to insult the people with anchored VWAP. Brian Shannon is a good friend, and he's been on our podcast a couple of times. I just like to keep things simple. Now, you can anchor VWAP all over the place, right? You can anchor it from this low, you can anchor it from that high, right? I anchor it from the session open because the majority of traders use the session open. And I want to know where the majority of people are going to transact, right? I like 23-hour VWAP. It's simple. It's what I've used my whole trading life, right? So what VWAP is if you're an institutional trader and say Texas Mike gives me an order. JJ, I want you to buy 1 million shares of this stock. Work that order over the next couple of days. Well, I'll try and get him prices under VWAP. If he tells me to sell 1 million shares of stock and work that order, I will try and get him prices over VWAP. So if I get him good prices, I'm a good trader and he'll call me with his next order. That's what VWAP's about. It was invented in the 80s. What was the name of that firm? The first company they used it on was Ford. Abel Nozer? Yes, Abel Nozer. Abel Nozer, 1984. That's when VWAP was invented. Good stuff, Matt. You want to identify that offer. So let's say you are short, right? Say you're short from VWAP, from my 58.27 on a look above and fail. Say you're short 27, 26 and a half. You see how that offer is moving lower? As the offer moves lower, the sellers were here. Now they're here. Make that a little bigger. Come on, come on, come on, come on. Right? So you can see it. The offer is moving lower. This is the merchants are chasing the customers out of the store, offering them lower prices because they don't want to buy 27 and a half, right? Well, how about 26, right? And they'll offer it probably down here to around 25 quarter, right? And I suspect just from looking at this candle chart, I can tell that there are some shorts trapped here between the top of these candles and the bottom of these. And they'll start to bid. Let's see. Am I right? Let's see if my coffee's any good this morning, right? So we're just watching the offer. Now, market profile has some uses, right? That low here, that's what we call a poor low, okay? What that means is it has only one tick of excess. See where K takes the J by one letter? That means that there's buyers competing here. Who are the buyers? The people who are short underneath. See, look, see how we came down to this level and we couldn't even get down there. Look, buyers competing. Now, where's the next seller going to be, folks? They're going to be there and here, right? Candles will tell you a lot, folks. All you got to do is pay attention to the candle. Your candle patterns and everything, I'm not dismissing them. I'm saying, why don't you learn what creates the pattern, right? You guys have your head and shoulders, reverse head and shoulders. Uh, those are the only two I know, right? Don't you have something that around baseball pennants, right? Every time you think pennants, I think Major League Baseball. But you know, but whatever your pattern is, learn why the pattern exists. So when you trade the pattern, you can visualize what's going on that's creating that pattern. So you just don't have to blindly learn a pattern, right? Because the pattern represents a type of business that repeats. See what I mean? Right? See, look, there we go. So now the seller has moved down here. See? So say you're short 27. As long as this offer, this red line is moving lower and lower and lower on each candle, right? You can stay short. Now, if I was short 27, I'd go put in a 24 and 3/4 bid, right? I'd front run that level by a tick or maybe two. So say I'm short 3 contracts here. Hopefully this helps you guys, right? Say I'm short 3 here. My stop is here, okay? I go and put in a 25 bid. If that bid does not get hit, what does that mean? It's a buy order. So if that buy order does not get executed, I know that we're running out of supply. Because if I can't buy one measly micro contract at 25, that means supply is running out and the market's going to rotate up. If I get filled, then I put my next buy order down here, right? 24 and 3/4, and then the next one at 24.5. If the market comes and hits those buy orders, beautiful. I know that it's probably going to stop selling off around 24. So I want to front run that little position here. Yeah, Matt. And when you join the our Discord, just DM me from inside Discord. We'll help you get set up and going. See, there's 24.5. We printed it and the offer came up. So do you see how it makes sense if you're short 27, 26.5, 26.75, right? You put some buy orders in to know whether or not there's any supply. I don't look at tails. I just look at the candle. All I care about is where it transacts, right? So I don't do the whole candle. I didn't read the book on candles. All I care about is if I have a bid in Sing, right? If I'm trying to buy 24.25 and I cannot get product at 24.25, then I have to move my buy order up. And that gives me practical information when I'm short. Do you understand what I'm saying? You don't need to overcomplicate it. Just watch the offer, that red line. See how the offer is coming in? And where did I say it was going to come in? Right into this cost basis. You see that, Sing? Very simple. You don't have to worry about tails and ears and trunks and whatever you guys just watch the offer, right? Keep it simple, right? Just keep it simple, right? Keep it simple so you can make some money, right? There, see, we came right into that cost basis, tag that standard deviation. Now London's opening. What I'm interested in, my big question is, and I haven't taken a trade yet, are we going to hold this overnight low? And that's why I told you to cover into this, right? Because we caught a bid. So why not maximize your profits? You know, especially we do a thing in our room called market awareness. Okay, I'm trading tonight. What are the conditions like? Right? What are the conditions like? Is it choppy? Is it tradable? Right? Is it just doing that barcode chart pattern? There's a seller right there at 25.5. Let's see if they see buyers, they'll lift their offer, right? They'll make the buyers pay higher. If not, we'll come back down underneath that 22, 23 area. Either way, there's no trade for me right here, right? I like the look above and fail of 27 half down to 24, 23. Good. Then I'm looking for a look below and fail of 21 and a half or a look below and fail of 58, 18 and a half. Knowing not to trade now and initiate a trade now keeps you from getting stopped out. It keeps you from over trading and it keeps you sane, right? Retail traders have to really protect their sanity, right? Protecting your capital makes you protect your sanity. What are the specifics of those levels? Okay, Fancy, I think you came into the Discord room. Did you I remember speaking to you and having a conversation with you. Did you read any of the educational material that was in the room while you were there? I have a ton of videos on why the levels, they're based on two-sided trade balance and the acquisition of a position. The levels are based on the business. Are you the same fellow I spoke to? Hello? Okay. Moving right along. Okay. All right. So we spoke. Did you read the stuff? Did you watch the videos? It's all in there, brother. And I do the same thing every day, right? So the blue zone is the balance, right? That's the acquisition of inventory. The green zone is where you sell it for twice for profit, right? And purple is four times profit. So we took the stuff from 18 to 21, we put it and we sold it all the way up to 27 and a half. Then what happened? We ran out of buyers and now we put it back on sale down to our cost basis. So the trades are based on that. The specifics are the acquisition and distribution of inventory. The chart keeps track of where the inventory is being bought and sold. Your trades are based around the business of acquisition and distribution, right? So does that help? Why those levels and what are the specifics? I know this stuff sounds foreign to you guys because you guys have all been taught trading in a very sort of obscure manner. The reason why people have trouble dealing with this is because it's simple, right? And anytime you try and show somebody what the simple answer is to a question, they will always doubt you. It's got to be more than that. So I ask you all, go and Google stock trading in the 1970s, right? Stock trading in the 1980s. Look at the technology. Wasn't that long ago. How did people trade before all this fancy software? And trust me, they did, and they made a lot of money. Go Google it. You don't have to take my word for it. Go do your own research. See, there's 21 and a half. So what are we going to do now? So I'm going to wait for the market to come under 21 and a half. Right? I don't want to waste your time. Right? I could go and spout a bunch of fancy crap, right? So if you are positioned short for the larger traders, your target is about 58.18 and a half, right? Because I know that normal people have lives, they have children, they have bills to pay, they have hockey practice, soccer practice, football practice. They got to do all these things. They can't sit in front of a screen for 18 hours a day. So I want to maximize the efficiency of your education for the time that you have. So you're not chasing waterfalls, to quote TLC, right? I want you to get the information, learn how to do it, protect your capital, make some money, and go enjoy your life. Simple is not easy. But let's say, whoever said that this was supposed to be easy? Here's another thing that while we're waiting for this, let's see if we can get back up about 21 and a half, right? If you were trading on a floor, right? So you guys don't get the sense of urgency, the sense of business, right? If you're trading on the floor and someone starts competing with you, well, you know, you want to punch them in the throat, right? Someone's trying to take your money. You guys don't get that sense of urgency when you're looking at a chart, right? When traders used to trade on the floor, they'd be face to face and you'd see someone effing with your order, right? Or trying to front run you or trying to, do something and mess with you so they could make money off of you, right? And then you'd have to cut them off at the knees, right? When we were trading on the phone, same thing, right? There was a sense of urgency. Here, you're sitting in your house pushing buttons like you're on Amazon, right? There's no sense of urgency. There's no, oh, I'm long and somebody's selling in front of me. He's stealing my customer, right? I got to punch him in the throat, right? When you're long and you've got a sell order that's not getting filled, right? You price compete, right? Don't let somebody grab your customer, right? It's business, right? It's cutthroat. We don't get a sense of that urgency sitting in front of a screen. But if I put you in a room with a bunch of traders, you'll get it right quick. You'll get it really quick. Depends on the order flow, right? Is it easier to short in the overnight session? Sometimes it is because you get that nice gentle sell down. Hey, squirrely, what's up? Right? So sometimes it is, but it all depends on the order flow, right? Now, if the sellers sniff out a bunch of buyers, they'll start raising price and shorting can be very difficult. Here is where this sort of thing where this is the front end of the move, this is the back end of the move. The sellers show their hand here, and this is where you should be shorting, not this. This is for size traders to dispose their inventory into. This is when they put it on sale, and that's when you short and you have a reference point. So you're not trying to nail the high, right? Because trying to nail the high is this is a fool's game, right? The overnight action is generally more gentle, right? And you can see the agenda, right? The inventory is here. We sold it. We put it on sale. Now we're going to come back here. So what is our opportunity? Our opportunity is a look below and fail, which it did, but we know that there's sellers all over here. So let's see if they can wring this thing out like a towel, right? So now what we're going to try and do, right? Think of when you take a towel and you try and get all the water out of it. Let's squeeze this thing and squeeze all these trapped longs. Because what we did was we took this and we sold it up here, and now we need to basically hold their head underwater and get them to puke it out back to us, right? So we could go do this again, right? Because that's commerce, right? If you look at, if you draw a volume profile, right? And this will maybe help you visualize things, right? Let me just get rid of this VWAP crap. Okay. If you draw a volume profile from that high to that low, you will see that the cost basis is here. So I used this area, right, to do the balance. Yes, this was distribution, and we sold it down. We came back up, and look, couldn't get above this area, right? 14? Yeah, that's right at the bottom of this cost basis. Do you guys see it? Hang on, let me do this. So the market is up at 58.36 and it starts to liquidate. When it comes into these levels, see how watch the volume at the bottom in that blue area and the red area. See how it's growing? That's that liquidating volume from above, and it's liquidating into wholesale hands, right? And as I draw the profile out, as soon as I get here to this area, do you see the second, this area right here? You'll see it grow out. That's a distribution, right? That's a distribution right here, okay? And then we take that and we sell it up higher, and look at that distribution grow. So we've taken that cheap stuff and we've distributed it here. Now they don't want to buy it anymore, right? So we have to put it on sale, and we're going to come right back to this area, right? That's the position. Does that make sense? Does that help you visualize it, right? The liquidating volume gets taken in by wholesale hands to be redistributed into the retail flow for profit. Let me know if that works for you guys. It should be simple, right? You should be able to explain this to a child. Yes, it is. You're right. I wasn't paying attention because I was playing with the volume profile. And this is why I don't trade a lot when I'm talking, because I tend to sometimes talk too much and miss trades. That is a beautiful look below and fail. So this is when the market looked below 18 and a half, failed. So you're trying to buy 19, 19 a quarter, 19 half, and you're going to be selling here before 21 because there's going to be sellers here, right? Now, if we run out of supply, the next sellers are going to be up at 22 and a half, right? And that is that rotation. Nice. Just make sure you sell into that strength. Put a 21 offer out, 21 and a quarter, right? If you got them, sell them because there's going to be some selling. Let's see where they step in, right? Now, I could be wrong and a huge buy order could drop, but what are the chances of that at 4:15 in the morning, right? So there's our seller at 21, right? They just revealed themselves. I'm here, da da da. Come take me, right? 4 points is beautiful. I will take 4 points all day, every day. Because you know what? 4 points on one contract, that's $200. right? On 4 contracts, that's $800. You do that trade once a day, 20 trading days in a month. Do the math, right? And you're stuck, and then you don't care what happens, right? You make your income and then you go about your life, right? Because most people don't want to be professional traders. They don't want to quit their job and do this for a living. They want to do this and make some extra money without having to spend 25 years losing money to do it, right? You feel me? Right. Now, the NQ people, they're a different breed of cat, right? And there are some profitable NQ traders, but the majority of people I know who trade NQ are not consistently profitable and they get smoked all the time. But they're addicted to that dopamine rush. So if you want a thrill, go do some bungee jumping, right? Now, if you're 18 and you're all hopped up on Red Bull and energy drinks, go ahead and trade NQ because you got your whole life to make all your money back, right? But if you're old like me and you just want to make some dough, pay your bills, right? And not overcomplicate things, the ES is for you, right? Listen, I don't trade NQ and I've got more experience than probably all the people here put together doing deals, trading order flow, making markets, right? If you said, JJ, here's capital, here's a firm, I want you to make a market in the NQ, I'd be like, yeah, sure, that'd be fun, right? Do I get the call, right? You guys don't know what the call is. If you have the call, right? If you have the call of the large clients, if you have the call of all the order flow, then you're great. But I don't want to trade NQ as a retail trader, right? Would I make a market in it? Oh yeah, that'd be fun. You could just roast everybody. Just get Mike to write the algo, right? It's a thin market. Hell, the ES is a thin market these days, right? There's not a lot of size on the bid on the offer in ES. You know, you got 30s and 40s on the NQ. What is it aside on the NQ right now? Why do you think that is? Really, I never really thought about it. I just know. I mean, oh gosh, where is it? Look, look, look at the size of the bids and offers on the NQ. Right? You blow on that thing, it'll jump. Right? It's 10 times less. It's a thin order book. Exactly. It is Rise of the Machines. The 0 and 1 mafia that you belong to, Mike. Yes. Yeah, it's the NQ is 10 times thinner than the ES, right? Now, if you're a fast trader, right? We have some people in our rooms who do trade the NQ and they do it successfully. But here's what the thing is. They've taken their beatings, so they have the experience and they don't whine when they get stopped out because you will take, you are going to get cut up when you trade that market. You can't go in there and think that, it's all going to be all like roses and unicorns, okay? Okay, maybe you'll look below and fail of 18 and a half. We fixed that poor low, right? We took out the K low with London, right? Buyers came in right. Look where the market stopped. Right at yesterday's point of control, where 70% of the cost basis is priced. I like smooth. There are people who trade NQ profitably, and I say good for them, right? But I'm like Danny Glover in Lethal Weapon when he goes, I'm too old for that crap, right? Right? You got to pick your times too on NQ, right? Just like anything else. Yeah, the New York Open, I'm sure that's pretty nuts. But you shouldn't be trading for a rush. You should be trading for income, right? Everything else, if you want to rush, there's all sorts of things you can do. You can go bungee jumping, skydiving, you can kickbox a kangaroo, whatever that floats your boat, right? Alligator wrestling, you could try and become a rodeo clown. All good alternatives. Yeah, I'm on the fourth day of the fast now. I don't even miss food. It's great. Because of the time change, Mother Truck. Nobody understands when you start, Sing. That's why that's why it's called learning, my friend. Right? If you wanted to be a heart surgeon, would you know what to do right off the bat? Probably not. Right? Oh, by the way, I took a long at 18 and three quarters, and I'm just going to scratch it right now because I was early. Right? So I'm taking some test trades. Right? So I thought, okay, look below and fail. So I bought 18 and three quarters. And as soon as it broke 18 and a half, I was like, it was just one micro. Now, what does that tell me? Well, it tells me that I may be a little too eager. Maybe I'm early, right? Because I was early, right? Now let's see if the next candle can stay over 18 and a half. Because if it can, and you buy it, you might have to pay up for it, like 19 and a quarter, right? So you're long 19 and a quarter. There's a seller at 21. These aren't trades that are going to make you money. These are trades that are basically what they're doing is they're testing your skill in the morning to see whether or not you're seeing the order flow correctly. Right? And you'll be looking for a seller at 21. So you're going to have some competition. And we want that offer to lift. Right? We need that offer to lift, and now we need a print. No print. Nobody took it. Right? The offer lifted and nobody wanted to buy it. See, it's right here. We need to lift here, and we need somebody to come and take it to print it. That'll bring more buyers in. But if we can't, it's going to rotate back down. Right now, the price action is kind of crappy, right? So it's slow. There's not a lot of follow through. All of the short term inventory is above us. So it might go sideways here for a little bit before it does this. So if you're long, right, make sure to put your sell order before 21. You want to front run this guy or girl. See? You got to front run where the sellers are. Don't be a dick for a tick. And the look below and fail should feel late. And let me use an analogy. Say you're selling oranges, right? You bought them for 20 cents, you're selling them at a buck 50. Sales are going kind of slow. Somebody comes and offers you $1.40 for an orange. Do you make that sale or do you say no? You have inventory. Anyone? Right? This is trading. Whether it's ES contracts or oranges or whatever it is, right? You have to price compete. Exactly. Make that sale because your cost basis, what did I say? 20 cents, 30 cents, right? And you're selling at a buck 40? Hell yes. I'd hit that bid all day, right? That's why people front run. How do I know a huge buy order is coming in? I'm hoping a huge buy order comes in. Everybody wants to hold their trades longer. I understand that. Everybody wants to make more money. But I'm telling you to build the skill of learning where your sellers are competing because that does two things. It helps you be a profitable long trader and it teaches you how to be a short seller. Learning how to go long and spot seller competition teaches you how to be a good short seller because where the sellers compete are where you initiate your short. Now it's going to take some time, but light bulbs have to go off. Don't ever hope for a large buy order, especially at 4:30 at night. You have to have some sort of situational awareness. I always want to get out of my inventory. Always think that that inventory, Terrence, when you're long, is burning a hole in your pocket. You got to get out of that inventory and turn it into cash. If the market conditions are better, you can hold the trade longer. But if there's not much follow through, if the short term inventory is above you, sell, take the money, right? Take the money. You guys and ladies are sitting in front of these screens, sacrificing family time, health, all of that stuff. Get paid. Watch the offer. Do not look at the DOM. The DOM is a fool's game. Okay? Watch the offer on a 1 minute candle chart. Learn how to focus for longer than 30, 60, 90 seconds, and you'll be amazed at how much information a 1 minute candle chart will tell you. Focus, 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 focus. No distractions, right? The DOM are expressions of interest. No large trader, unless they were high on cocaine, would tell everybody what their intentions are by putting their orders in an order book so everybody could see them. Okay? Just use the candle chart. Those are printed, these are printed transactions. The DOM are expressions of interest. Those are that's untransacted. This is actually what happened, right? Sorry, I'm going on a little longer than I should. The candle chart is just this. This is the actual, like a cash register. This tells you One guy bought, one guy sold at that price, right? This is transacted volume. This is being put into a visual medium so we can understand it. In the old days, all we had was this, right? So could you trade off this just by watching the bid and the ask and the last sale? I can, but it's very hard and it took a long time to figure out. So we take this and we put it into a visual medium. Keep it simple, folks, right? Keep it simple. I promise you, if you keep it simple, it'll work. It just takes time. That's all. It just takes time. Thanks, everyone. Have a great morning, and we'll see you at 9 a.m. Eastern Time when I do the morning session. No, I don't know that name. Thanks, Sing. I never worked at Virtue. I mean, there were a lot of Virtue bought Knight Capital, and I knew a lot of Doug's. Maybe if he worked, in the 2000s. You caddied for him? Oh, good. If he was from Knight, I probably ran across him, but Knight had a lot of them. Knight was the dominant market maker in the 90s and the 2000s until they blew up in that flash crash. Thanks, everyone. Oh, Jade Street. Cool. Hey, man, you should have asked for a job. That's how we used to do it in the old days. You caddied for those guys, you'd be pestering them for a job. Thanks, everyone. Stay out of trouble. Come visit us at microefutures.com. We got that 7-day free trial. And hey, I haven't heard from anyone. I'm going to be including one person in my coaching class and one-on-one mentorship. And what I'm doing is I'm looking for someone who's hungry and who wants to learn. Just watch the offer only, Flo. Just watch the offer. Okay. Thanks, everyone. Bye for now.